Now looking at the markets, they're pretty much taking a wait-and-see approach just ahead of their Fed announcement later on today, and as well as the ECB meeting that's due to start tomorrow.
Yes, indeed, Mashudu. Markets really do seem to be taking that wait-and-see approach, especially given the fact that there has been lots of talk from Bernanke over the past couple of weeks that there is some room still for some policy stimulus, and whether the QE3 is likely to be on the cards at this point is a little bit of an uncertainty. Standard Bank doesn't believe that we could see the QE3 coming through for today, or even some rate reductions. In fact, we're only seeing that happening more towards the end of the year, as they have said that they're going to review the Operation Twist towards the end of the year. With regards to the ECB, we don't expect the ECB to cut rates at this point. We are more or less in line with consensus, but having said that, we do believe that there is still room for the ECB to cut rates before the end of the year. So we are looking to see a benchmark lending rate from the Eurozone at about 0.5% by year end.
Now, all those factors having an impact on the Rand. We have seen the Rand trading pretty much a range bound this morning. I think it was around 8.22 if I'm not mistaken. Your thoughts on the type of trading ranges we could see coming through for the Rand for perhaps after this meeting and for the rest of the week?
Well, we are expecting the Rand to trade within the similar trading range that we saw yesterday for today. It was about 8.17 to about 8.22 before it actually depreciated towards the end of the day. We are expecting to see a similar trade during the course of the day. We do have a PMI data coming out later today, which could obviously have a positive impact on the currency, but we are expecting very low numbers coming out of that, and that could add some additional pressure to the Rand. So we are looking to see a trading range today of about 8.17 to about 8.30.
Let's look at some of the data points. Like you say, PMI out here in South Africa later on today, but we saw China's PMI just at an 8-month low of 50.1 points there in July. Your thoughts on that number coming out of China?
Well, it did come in much lower than what was expected. It came in at 50.1 in July, and it is threatening to breach that 50 benchmark level. And just looking at the data, the details of the data, we saw that 10 of the 11 subcomponents are expressing or showing that contraction during July. But that's really also attaching to what we're seeing in the global economy. We're seeing low PMI numbers coming out of the Eurozone and the US as well. And it seems as if South Africa is attaching to that declining trend of falling PMIs in the global economy. So that wasn't really good news, and it really adds to the flurry of negative news coming out of China and really putting a spin of, or rather uncertainty of what's happening in the global economic recovery.
We also have a data point out also this week of vehicle sales. We have seen vehicle sales edging up for the past couple of months, given that we have seen consumers still under pressure. Your thoughts on the type of numbers we could see coming out of vehicle sales?
We are expecting vehicle sales growth to have moderated somewhat in July to about 13.1% from 15.6% the previous month. But having said that, there are still a couple of indicators, or rather factors that the consumer is really latching onto. We still have very low interest rates, and it seems as if a number of incentives are starting to, have been spurring local vehicle sales. And it's really the only demand side of the economy that is showing robust growth that we have seen since the beginning of the year. So we are expecting a moderation for July, but we do expect that the total average for this year is closer to around 10%.